All right. Welcome, everybody, to our loan officer training series here with the mortgage calculator. We're going to wait just a few minutes to get started here. But we did put up the chat if you want to drop a comment in the chat. I see some people are already chatting there. But anybody tuning in, go ahead and throw a comment up there while we wait to go live on all the different platforms and make sure we give everybody a chance to hop on. All right. Thank you, everybody out there tuning in. I see all the comments rolling in. Tonight, we are going to continue what we actually started last night. So, for those of you who were tuned in last night, we're going to build upon that tonight. All right. It looks like we are live and good to go. So, we'll go ahead and take the chat off there and we can get it started. All right, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non QM loans. And we do this loan officer training series every week on Tuesdays and Wednesdays at 7 p.m. Eastern, where we go through different trainings for loan officers. Today's training is somewhat taking it back to the basics and something that's going to be a core of your business, which is pre-approvals for purchases. Now, we touched on this a little bit yesterday, and we're going to continue on this here today. So I'm going to go ahead and turn it right over here to Jose, who's got some things to go over with the purchase pre-approvals.
All right. How's everybody doing tonight? Thank you for joining us for part two. This is where of our sales training on purchase pre-approvals. Last night you got some of the nuts and bolts, of the matter, but today we're going to apply some of that theory and give you some of the whys and do's and don'ts important about the pre-approval process. We all hear about pre-approval, pre-qualification, what it is. So I do want to clarify some of those points here. So let's get right into it. All right. So purchase pre-approval strategies. Now, mind you, remember, we're all about the mindset that we are creating here because we are consultants. And we are, as mortgage loan originators, trying to add value to the transaction. Now, if you remember when we had the training about mastering the sales call, you will note that a lot of the intertwining thread on all of that message had to do with building trust, building rapport, in order to basically get that, to differentiate yourself and get that borrower to work with you. Now, it's a lot easier to do that um, when it's a referral, personal referral, repeat business. I mean, you could be doing your third generation now of that family, or if you've been around long enough, maybe even your fourth generation, or maybe they had kids early, who knows, right? But the whole idea, the intertwining thread there is rapport, trust, credibility, confidence. We're talking big money, um, especially as these property values keep going up. I mean, when I started in the business, we're looking at like 100,000, 125,000, 150,000 average middle class suburban neighborhood home. And now those homes are 750,000, 850,000, 900,000, right? So these transactions, even though, yeah, the money's a little inflated, the transactions have grown rather, large transactions, more the reason to build that trust. And the pre-approval is one of the tools to build that trust and to build the credibility, definitely to build the rapport, definitely to get the referrals. So you're going to see as we get into now, if you remember a little bit of the theory that we talked about last night, and then we're going to see how we as MLOs can apply that to basically get the deal done. There's a lot of facets. If you never get that contract, if you never get that application, you're not, you basically didn't finish the deal. So just to give a little refresher on the main message last night, what is the purchase pre-approval? You'll note my nice red bold type there. It is not a pre-qualification. Now, if you remember that and you have that message clear, you'll be able to much better convey the message and get that much more credible relationship and get those referrals. So again, we all know why we want to get a pre-approval, the basics why. Obviously you want to know what program is the best one that they qualify for. Not a pre-qualification for sure. And to remind you a little here again, why get pre-approved, you'll see right there, I put it in nice red bold, the importance that it is to the listing agents and the importance that it is to the buyer's agent. Again, this tool, this very powerful tool that we have, that is the pre-approval, is the path to differentiate yourself, get that much higher up in the echelon than your competition, so that it shouldn't be of any consequence to you how many people are licensed, because you're one cut above when you're a mortgage calculator MLO and you're a consultant, right? That's why when every now and then somebody says, hey, why don't we do pre-qualifications? Why do we got to do the pre-approval? The first thing that I start thinking in my mind is like McDonald's. They want to be McDonald's. I want to be that nice, fancy restaurant that gets people coming forever. So we know the obvious here, right? So what are our main objectives then, right? We know how powerful this pre-approval tool is. We know that we don't want to squander the opportunity to build that trust. You only get one chance. If you mess up, you may never be able to recover the trust from that borrower, the trust from that realtor. You remember again how important it is just to get them to work with you. They got to trust you. And then once you build that trust, you blow it. And it could be a lot of ways you could blow it when you're trying to do a pre-approval. If you go into the wrong trajectory, you give them a pre-approval for something that wasn't applicable, that's out the door, credibility, trust, everything. So, you're really looking out for everybody in the transaction. Title companies, insurance companies, referral partners, your realtors, and obviously your borrower who you have a fiduciary responsibility to. So you want to get that commitment, you want to get the deal. If the pre-approval is solid and on point, you're gonna get the deal. And then if it's an accurate pre-approval and everything works out, you're gonna close the transaction. And then the end result, what we really all look for is repeat business, because we all know that repeat business is the easiest business that we're going to get, where we're not going to be shopped around. We're not going to have to, we will already be ahead in this whole action plan of how you're going to get the deal, because you already have their trust. You already are credible. So all of that is already a given. You could still mess it up by giving an inaccurate pre-approval and lose that trust, but at least you already are a few steps ahead in this action plan to get the deal, to close the deal, and to keep getting repeat business. So you see, the importance of this and how powerful the pre-approval is. So you should never think, try to, hit the easy button, because you're really going to miss out on the opportunity to differentiate yourself as a true mortgage professional consultant. And you're not going to have issues that other loan originators may have with losing business for $5 a month less monthly payment. So, loan officer duties. I could have split this up into a couple slides, but you see, I wanted to convey our loan officer there holding all the stacks. That's 1980s, right? Basically, something like that, maybe early 90s. But he's all happy, right? He's gonna get that's probably like one complicated loan right there and all that paperwork, right? But you get the idea. Our duties now, and when we putting on our consultant hat, is accuracy of the diagnosis. Just pretend you're the doctor, and this is brain surgery, open heart surgery. If you have a bad diagnosis, you go down the wrong path, your patient's going to die. They're not going to make it. So you got to make sure, because if you go down this wrong path and then you do get the deal, and then all of a sudden halfway through the deal, you got to switch trajectory because you were not accurate, you may not get a chance to recover. These margins of time are very tight. Borrowers do not always come to us with as soon as they got the deal. So keep that in mind. So you have to make sure that we at the Mortgage Calculator, especially, require you to gather all the pertinent documents to accurately review and what you are putting forth on the application. We do not do pre-approvals based on information that's just given to us, verbally or in an email, unless it's documented with something that you need to document whatever it is you're documenting. A lot of documenting going on, but you get the picture, right? So obviously, depending on the applicable program, you're going to be looking at income. If it's full doc or one of the other alt doc options that we have, including DSCR. This is for purchases. Remember, this is not a cash out refi, so we're going to be looking at assets that they're going to use for the transaction, right? How much do you need is the obvious, but then where are they going to come from? Who's it going to come from? Is there a seasoning requirement on the money that you're going to have to show? All different things that you don't want to come get you by surprise at the end. That's why you're going to be looking at those bank statements for large deposits and seeing if it's a program you're submitting it to doesn't have an issue with large deposits, then you're okay. But you're going to know, especially if it's AUS, you're going to see on your findings, it's going to say any percentage above this much, depending on the income. So read the findings if it's AUS, read the guidelines if it's non-QM. Are there going to be gifts? If there are, what program type are you doing? Is it FHA, where you got to show the transaction history from the donor as well as the recipient of the gift? Or is it conventional? You just got to know that it was a wire transfer or a canceled check. So these are all things that have to be resolved before the gift occurs, because if they give it to them in cash and it wasn't in a bank account and there's no way to show a transaction history and it's FHA or conventional, you can't show who you got the money from because it wasn't a cashier's check, then your gift is out of gas, right? So you got to make sure that you let them know the requirements. And then again, is there any seller credit, any realtor credit? You never know. Sometimes realtors are participating in certain programs. They offer some type of like a hometown heroes program, doctors next door, nurses next door, different types of things where normally for the realtors to participate in those programs, they give a part of their commission to the deal. So find out if there's any realtor or seller credits in the picture. Those are coming back into the picture in some markets. I just disclosed a file today for one of our MLOs with a 2% realtor credit. Borrower lost the deal about a month ago on a cheaper property that they had inspection issues. Now they landed a better deal for more money and got a 2% seller credit in the deal. So Those are all things that can come into play, but don't you just assume it's going to happen. Put it in your pre-approval, send them on a mission in a market where maybe seller credits aren't happening, and then structure your whole pre-approval on a seller credit that's not going to happen. So make sure that whatever you are doing is realistic. And then we have the obvious credit requirements. I always talk about know the credit, read the credit. It's not just about the credit score. There's a lot of different things that you have to take into consideration, especially if you're doing automated underwriting, things like disputes. A lot of people whiz right through. They got the approve eligible on DU. They're so happy, and then they forgot that disputed accounts aren't allowed on conventional. Then you got to undispute it and put it through a rapid rescore to have it not show up anymore. So keep that in mind when you set your expectations for the pre-approval. And then the obvious collections charge-offs, but in DU it's a little easier. You got to look at how it affects maybe the non-QM, because it's not DU. Remember, non-QM, you're the filter. You got to review those guidelines. You got to review DU findings and see what is applicable and what is possible, so that you, the doctor, can have the proper action plan. So when you go do your surgery, which is the loan application, is like the surgery process, and the closing is the happy patient, leaving from the surgery or from the hospital room going home. That's pretty serious if that patient dies, right? So issue that pre-approval letter only after a solid AUS approval, which is approve eligible for DU or accept for LP, or a successful guidelines and matrix review. And if in doubt, please reach out to your team leaders, reach out to management, set structure meetings. We'll be more than happy to help you on any of these pre-approvals to make sure that you can properly convey the message and get those referrals. So, what are the borrower duties in this deal, right? Because borrowers do have duties as well. I mean, we talk about the MLO because we put them first, right? But the borrower has certain duties that they have to do as well, right? I mean, the borrower is the one that completes the loan application, right? They're going to put their basic info, all their stuff, as much as they know. We know that that's not always accurate because borrowers don't always know how to compute their income when they're self-employed. They tend to put sometimes the net income, and sometimes I don't know where they get the information from that they put on the application, but that's where it has to start. The borrower has to complete the application, right? And then that application is submitted. We run the credit report as well as soon as the application is submitted. And then we have our document packs that get sent to the borrower as soon as the application is submitted. But those are more internal procedures of ours. But basically, you're going to get, the borrower is going to submit their application with the documents internally so we can review. And then if they need any help after you review docs, you revise the application. But they're going to have to provide their documents on a timely basis because you need to, be able to properly document whatever is applicable for the program, right? If it's income, assets, definitely a property, their ID, they are who they are. And if proof of funds is to be provided on the transaction, the proof of funds would be provided by the borrower to his agent. That's why, notice it's the buyer's agent. There's a reason why the word agent is there. That buyer's agent is representing the buyer, right? So the buyer's agent doesn't send out that proof of funds with the bank statement unless he's been provided that by the buyer who's our borrower, but never by you, the MLO, because that's private information of the borrower. We cannot be disclosing our borrowers private information of any type. Nothing of theirs can be disclosed. But the borrower, is free to disclose whatever they feel they have to disclose to reach their objective. That's their prerogative. Obviously, I recommend that they redact account numbers, social security numbers, but you would be surprised the emails that I get as an agent with unfortunate people's private information. But again, that's the borrower's duty, not the MLO's duty to provide any type of proof of funds to anybody, nor do MLOs are really responsible to provide a proof of funds pre-approval letter. Now, that's I hear some chatter out there about in the fix flip rehab world on these proof of funds pre-approval letters, but that's really, if you know what a fix flip deal is, there's no way that that could really hold any weight once an application is being reviewed by an underwriter and by the lender funding that loan. So I would never recommend issuing one of those as a guarantee that the borrower is basically has those funds on a guaranteed basis and that there's no way that they would not get those funds to be able to close, when we know that's not true. And I think if we probably do research, I've also heard of people losing deposits because they've presented this letter and the borrower's agent, buyer's agent in that case, presents it more as a guaranteed source of funds, and the listing agents possibly perceive it maybe that way as well. I haven't spoken with any of them personally, but I think that's what's going on and why they're like requiring these letters now. And mind you, they've just created this situation with a document that doesn't really hold the weight that they think that it does. And it just is causing confusion in the industry with some mortgage loan officers, because you also got to figure that then these investors that are asking for these trying to get these letters may not possibly close on that property either. They don't even have their own money to provide as a proof of funds. So you may just be wasting a lot of time there with a transaction that's not going to close. So again, the borrower would be the one to provide the AUS findings to the listing agent. If the borrower felt that was necessary, the MLO would never provide that. And the MLO will never provide actually the AUS to anyone other than the borrower. So it's very important to note, because in some markets that are competitive, like the local market where I am in Southeast Florida, the agents state that on an agency deal they want the DU. So you can, then at that point, the borrower, if they want to, they can send them the first page of the DU, just shows the prove eligible and that it was run and all that kind of stuff. I don't think it shows on the DU, doesn't show the social. On the LP it does, so you got to redact that social. But that's it. And but that's up to the borrower if they want to do that. And I'll tell you, in South Florida, they all do. Every single agency offer has the first page of the DU. And last but not least, we're talking about the realtor duties, because we were mentioning now the realtor and in some cases how they're complicating this situation. I'm sure there's going to be some E&O lawsuits there, claims, if they don't watch themselves. Realtor duties here is very important when it's a purchase pre-approval. That buyer, our borrower, is going to have a realtor. If they do not have a realtor yet, then you need to refer them to a realtor. Remember, give to receive. They'll be more than happy to get that pre-approved borrower that they then will be their pre-approved buyer. Right? So then you would want that realtor to be able to provide a solid market analysis to you of the property value, and if applicable, any rental comparables that you may need, because you all know how difficult it is to get an accurate rental rate, and the buyers tend to think it's $10,000 a month, so we can't really rely on what the buyer is telling us. Hey, yeah, it's that much. No, we need data, because we need to know what the appraiser is going to put on there. It's 1 + 1 = 2. And then, very important, if the realtor can do a little search for us and let us know especially if they have the MLS. Sometimes they have more updated data that hasn't been yet entered into the public records. So they can let us know if this property is a flip, right? In other words, is this seller who's selling the property, have they been on title for 180 days or less? Because that is going to trigger, possibly depending on your transaction type, certain additional requirements, like possibly second appraisals, heavy documentation of any upgrades done by the seller. So a lot of things that can trigger. So you don't want to get caught off guard. And then another thing to note is the property rural? They can let you know, but you can do your own little research on that. It's pretty, do some aerial photos, right? Let us know of any deal specific, market specific factors, like I was mentioning earlier. Is seller contribution going to be possible to put together? And then we really want our realtor to be able to properly convey our offer, the complete package, not just the contract, but the pre-approval, all of the positive attributes of the transaction. That's why the pre-approval letter that we have when it's DSCR is so important. Like I was mentioning in the training, that we convey what that means, that's basically a no income type loan, as long as they know that their rent is good. And if they have a lease and their property is already leased, then they already know the income. It's a no brainer. That's like almost like a cash deal, except with valuation has to come in, but that shouldn't be a problem either. Which, leads us to the last point about, this is not a loan commitment. They all have to understand. That's why I was talking about that pre-approval proof of funds letter. That's even worse, but whatever we issue is not a loan commitment. It's a pre-approval. It has certain requirements that still need to be met. So make sure that that expectation, it's realistic what we're conveying, because we need to protect the borrower's deposit. Right. In the end, remember, we want the borrower to not be stressed out, to be happy to get the property. But typically, with our real solid pre-approvals and with the good reputation, you're going to land the deal 9 times out of 10. So this is in the end, we're shooting for accurate pre-approval results in satisfied borrower, and that makes the job that much easier to do, and also much more satisfying. And then you're helping them out, home ownership dream, and get referrals. Doesn't get any better than that.
All right. So I have a couple things to bring in here. I do want to go over the realtor responsibilities on the next level in the training of what we can and can't ask of them once the deal's underway. It's very difficult sometimes to work with an agent that doesn't understand their roles and responsibilities. So I want to make sure we understand the agent roles and responsibilities and our roles and responsibilities. So make sure we add that to the next one there, Jose, of that same slide, but the next level. Now I have the pre-approvals to share. So let's go over this example, Jose, of the actual export, right? So I have here an example. Let me go ahead and switch my screen, and we'll pop that up. Let me try this. Share screen. And here is a sample pre-approval letter from one of our MLOs. I just pulled it out of some test stuff. So this is just a test file for a fake person, John homeowner, fake address, TBD address. But let's break this down, Jose. Let me go ahead and pop it up. So on the right side here, we have our pre-approval letter, and on the left side, our pre-approval worksheet, which is really what I want to go over in detail. So first, I guess I can make this a little bit bigger, and we can kind of go line by line through here. So on our pre-approvals, guys, we want to make sure that we understand what Jose was just talking about. The actual, coming to fruition of this is that we make sure that we've detailed that we've reviewed employment, income, credit, and assets, and then we actually received an automated underwriting approval for any agency deals. And remember, we're approving people for a mortgage payment not to exceed, and that's a total mortgage payment. We're not approving people necessarily for a loan amount. So we can say that this is the actual approval, and then we go through and we say what are the proposed estimates that we use to get there, right? Here's what we put in the scenario. Also want to make sure we highlight again, Oz DU approved eligible, so that we let everybody know that we're doing our job. Always want to make sure that the pre-approval is only good for a certain amount of time in case there's, bank statements change and all that. And they obviously have to have all of these things. So these go into what Jose was saying. The borrowers and the agents all have these different responsibilities that we have to get done. And obviously we're part of this as well. Now, obviously the loan officer has to sign it, all the legal stuff, all great. Now, what we want to do to separate ourselves as professionals, let's go ahead and split screen this again, is we want to accompany every letter, pre-approval letter, which are pretty basic, with our pre-approval worksheet. Some states are very fortunate, like Arizona and Texas are both great states where the state has actually required these worksheets essentially. So these are similar. So some of you MLOs out there in Arizona, especially, it's 100% required. Texas, it's part of our process, right? But we want to make sure that we use that same best practice, I would say, right, Jose, in all of our different efforts. So we went over the letter here. Now let's go over the worksheet. So this is something that's unique to us. Not many other companies use something like this. Some states do, but we want to make sure we accompany every approval with this, which signifies what we've done. So in this case, I've copied over some of the data here, but let's go through it nice and big because I know it's hard for you guys to see sometimes. This is fillable. So obviously I clicked primary because that was what the quote was that Amber had set up. And I popped in all the data that was in there. But the most important thing that we want to do here is we want to, again, signify that we have reviewed data and what we have reviewed and what we have not reviewed, right? So for us, it's always going to be yes, 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 pretty much down the board, right? For other MLOs or other places that offer a pre-qualification, the answer is going to be no. So let me show you what it looks like when we do a pre-approval, and then I'll show you what it looks like when you get a pre-qualification from an online instant pre-qualifier, right? So when we do a pre-qualification, we always pull a full tri-merge credit report. So we always check yes to this. We always receive and review pay stubs and W-2. So we're always going to check yes to this. We always review personal and business tax returns. So we're always going to check yes to this. We're always going to review their assets and their down payment reserve to make sure they qualify. So we're always going to check yes to this. If there is a gift, we're going to review it. Remember, Jose mentioned that about 3 times just a minute ago, guys. Very important. So a lot of times it will be NA, but if a gift exists, we will never answer no. Our answer is always going to be yes, because we're going to interview the client and get whatever documentation we need to make sure the gift is applicable for that program. Credit and liability documentation. So this is very important, like disputed accounts that Jose mentioned a whole bunch of times, right? If there is some sort of credit or liability issue, we have to know, and we have to know that we can get around it, right? Just because DU says approved eligible, assuming that all your disputed accounts are dropped, that's one thing. Having the proof to drop those disputed accounts is a whole different thing. So when we answer this yes, that's very powerful as well. And then finally, we will never issue a pre-approval without Oz if it's an agency deal. The only time it would be any other answer is if it's a non-QM loan, where it's always a manual underwrite, and this would be not applicable because there is no Oz for a non-QM loan, right? So our pre-approvals, 9 out of 10 will come like this. Yes, 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 yes. We're going to describe the product a little bit. We're going to put all our legal stuff down here, but it's very important that we sign it and say that we have done this. We're explaining what's going on here. This is very important when we're doing like a DSCR loan. We want to make sure we explain, Jose will get into that more strategy of what to type in here. Very important box to convey information. But this is very different than if you compare this to some of the big box shops that have like an online pre-approval or online pre-qual, I guess I should say, right, Jose? How many of those, remember yesterday, guys, Jose just sold a condo, just put it up on market about 3 weeks ago. You received, I think it was 32 offers, something like that total. And
Yep.
how many had a actual pre-approval? You said not all, obviously, right? Can you break
Right.
down for us what was accompanied by each, and what was more
Well,
was from?
out of the offers that were financed, because there were some cash offers, right? But out of the offers that were financed, we were requesting, mind you, we're in that kind of market, and we had to really get to the cream of the crop, so we were requesting, if it was agency, the AUS uh, approval, find some kind of documentation, that it actually was done. We were requesting the pre-approval letter. We were requesting proof of funds, because this is a no reserve building. So they're going to be coming in with either 10% down if it's a combo loan, or 25% down minimum if it's a primary. So we wanted proof of funds as well. And I would say, I actually had offers that came with nothing, just the offer.
But did you get one of those
Then I got those that
NASA letters that
then I get one of those that just came with like the very simplistic letter that made me feel like they went to a website and just printed something out with information that they input. Maybe the system did a soft pull on them, is probably what occurred.
Yep.
A soft pull, the information you've represented in writing there, which you could put anything in there, and then based on the information you provided and the credit, blah blah blah, you're pre-approved up to this. It's like, really? And then if you call as the agent, you call to try to, okay, I got all these offers. I'm calling the agents, the MLOs also. Okay, let me see. LO number one. No, can't get a hold of this person. They don't exist, or who knows? It's one of these pre-approval mills. The MLO's name's on it, but they didn't really do it, right? They have no idea what I'm talking about. So finally, I get to the person that's the real pre-approval, the one that can answer the questions, right? Let me know the why they're doing this and this, because I know what's up. If they're gonna tell me, like somebody the other day tried to tell me a VA loan is like cash, I'm like, on a condo, on a condo, like, really, you haven't worked with VA loans? They're like cash. I'm like, I didn't want to be disrespectful, but it was crazy. But again, that's not the deal. The deal was when I got to talk with the MLO that, really answered the question. That's the one that, because all the offers were pretty similar.
What were you asking them? Did they review credit?
Yeah.
Did they review pay stubs?
Yeah,
did they review tax returns?
Yeah,
did they review down payment?
I'm vetting the pre-approval. Did you run DU automated underwriting on this? I don't see here if they did. Do you have the bank statements? Did you really see the pay stubs? Did you see the W-2s? Because I see, that's probably what it's going to ask you. And if they sounded like they knew what was going on, at least that's all you can do. If they know what's going on, they're not, unless they're lying to you, which I'm going to assume they're not. If they're telling me, yes, I reviewed it, and they sound like they know what they're talking about, I think that they probably did review it. And then I'm going to feel much more confident. And the one that did get the deal was where they had the competent agent that had realistic expectations, and the competent MLO that gave a real good summary of everything, besides going above list price and being like, 40% LTV. It was the agent that answered the phone that knew what was going on, that did the solid pre-approval, is the one that got the deal.
Yeah.
And
then, so just a good example there, but I just want to go through here, and let's do the scenario of, let's do this with the the NASA instant prequal, right? Where no MLO answers the phone, and the prequal, if there was an MLO and they filled out the prequal, guess what their answers would be? No, because they might have done a soft, if not any at all, right? No, they haven't reviewed a single document. Not one document was reviewed in any way, shape, or form. Not one document was reviewed in any way, shape, or form. Not one document was reviewed in any way, shape, or form. Not one document was reviewed in any way, shape, or form. Not one document was reviewed in any way, shape, or form. And DU was not run. So this is what a prequal is. That is very different from what we do here at the Mortgage Calculator. This is what we do. Very different, guys. It's apples and oranges when you put them side by side, right? That's why we love this worksheet. It's going to point out the jokers and put you guys at the top of the list, right? Because As Jose explained, Jose is going to be interviewing you, right? Jose's the agent. He's calling you and asking you this question. But guess what? You already gave him this. You signed this with your legal documentation, your NMLS, and you signed this with a legal signature. He doesn't have to call you now. He knows that you've reviewed the tri-merge. He knows that you've reviewed the W-2s, right? So very powerful this can be. And for those of you, again, in those states where they use this regularly, I'm sure you guys like it. Kind of a pain in the butt. I know I've been beat up for it before from agents that are trying to make offers. It must accompany the offer in those states. So, some people in Florida, right, they can give Jose the approval after. Jose's calling oh, sorry, I forgot to give it. They still might be in the runnings, right? But those other states, they really require it. They're very strict. So I do appreciate those states and them making us all look like professionals when we do the right thing. So
Could you scroll down? Could you scroll down, Nick, there to the section on the loan type description?
Yes.
Yeah. I'm sorry, I interrupted you. I didn't know if you were going to say that. Something about that?
No, you can. We talked about it before, but this is where on conventional loan, there's not much to say here. But this is where I really like to take advantage of the DSCR loan, and we would put like DSCR loan requires no employment or personal income, only the estimated rents. Whatever we want to put to explain to the agent that this is different than what you might be used to, and this is what's going to be needed. Because it's a little harder to do that when we're looking at this letter, right? There's not a lot of space on the typical pre-approval. It's more of a form letter. We want to communicate that a little bit more of a blank space here. So use that to your advantage, guys, please.
Yeah, really important there. I've used that to my advantage and to your advantage a few times there. And I'm going to tell you, because obviously when you're checking not applicable on a couple of those boxes,
yeah, you want to define it, right?
Yes,
yeah.
You can't leave it up in the air, or else you're missing out on closing the deal with authority.
Because remember, a DSCR deal is going to look like this, guys, right? It's going to look a little bit more suspect, right? So you want to explain yourself here. Why we didn't review income, right? Because it's not needed. Right. Why didn't we review gifts? Because you can't use gifts, right?
Why is it a strength that we didn't review those? Because those are not applicable. Those are not going to be drawbacks to this program. Those are not going to weaken the transaction.
We don't need them at all. We don't even need those documents for the loan. And it's going to make us look better, right?
And if the property is already rented, for example, has a tenant in place, the income is already set. So, that's a lot of good stuff going on there. And if you properly document the letter and everything, really going to help you get the deal.
All right, let's do some questions here. I saw some good questions pop up. I definitely want to address. This one here, very good. Amanda's asking, is it normal for pre-approvals to be 30 days and not 90? Obviously, I don't think there's any legal reason you couldn't, but I would never want you guys to do that because guess what? Things change, right? The rates change. We all know that. 1 week to the next right now, you could blow your whole deal, right? So because if you're tight, rates change. Also, people's bank statements change, right? They might have 100 grand in the bank one day and they might have zero the next month, right? The next bank statement, right? We have to review assets again. We have to redo everything again on really a regular basis. If you're sending out 90-day pre-approvals, things change, guys. You might get to defeat the whole purpose of what Jose just explained, right? We want something that's real. If it's 90 days old, it's probably not real. And Jose's probably going to pick up the phone and say, hey, this is 90 days old. Did you review this month's bank statements? Did you run DU this month? Did you run the rate quote this month? If you're running off 90-day-old numbers, we all know rates were actually higher 90 days ago, which is, thankfully, right, for right now. But there's a lot of volatility that goes on. Not just rates, but with people's bank statements, right? They go up, down. Their credit goes up and down. All right.
And they lose employment.
Yeah.
Oh, man, yeah.
Here's a good question, Jose. Again from Amanda here. I think she's an agent. She's probably digging into the nitty gritty here. Is there a reason why we don't submit to underwriting for approval first going off DU alone? Very interesting there. So what is a TBD underwrite and what is a pre-approval, Jose?
Right. Well, it really depends the loan type that you're planning to submit. Right, because only for certain loan types will they do a TBD pre-approval, which means actually an underwriter will underwrite your credit and income file because there's no property. It's TBD. There's no appraisal yet. So they usually do not want to do that. Some do allow us to do that on FHAs, but it's going to be typically on a manual underwrite type loan only, which is a loan that you can't get the approval eligible that you need on automated underwriting. So the only option then to get an actual pre-approval when you can't get automated underwriting pre-approval on an FHA loan is to submit for a TBD manual underwrite. That's the only case that they will usually do it, and then they will review credit income, and they will then put the pre-approval stamp of approval on there for you, and then you, the MLO, can issue your pre-approval. You wouldn't issue an approval just because an underwriter reviewed it, because they're just doing the same thing you're normally doing when you're doing the non-QM deal. There, but in the, for the manual underwrite, there's a little bit of judgment that comes into it, but they still have guidelines for manual underwrite that they have to follow. And it's just not set up for automated underwriting to do that, but you get your pre-approval, and then you give the borrower the pre-approval. Only that case is when you're going to have an actual underwriter review the case, because there's no need to do so for a conforming loan, because the reason being that unless you made a mistake with your review of the documents, the actual documents, unless you made a review, mistake in the income, or unless there's something wrong with seasoning or something like that that you didn't pick up on, your findings are your loan conditions. It's just subject to finding the property and then vetting the property's title and the property's value and seasoning on title. That's it. But that's the same thing that it's going on anyhow on a TBD. So why are they going to review the docs that you're supposed to be reviewing? Doesn't make sense, right?
And the one thing that's the beautiful thing about Oz, automated underwriting system, is we all use it. The underwriter uses it. The underwriter doesn't get to make their own calls. They press the same button that you guys press. They get the same Oz that you guys get. They just probably understand it sometimes a little bit more, better, and they review the documents a little more thoroughly, right? Maybe than you. But if you do your job and you review the documents thoroughly and you understand your DU approval, there is absolutely zero difference between you pressing the button and the underwriter pressing the button. And matter of fact, if there is, then you just need to do a little more practice and try to get a little more better on the next one, right? So we should never be off from the underwriter. We should all understand the income, the assets, liabilities, all the things that go into that approval. We pop that in the computer, and the beautiful thing is we all read the same report, we all stick the same things in, and we all get the same result out. So it's really standardized the whole loan industry. It's a very powerful tool. So use it to your advantage, guys. Sending it to underwriting really doesn't help. Use it to your advantage by doing your job well, reviewing all those documents well, and putting the right numbers in the box. And your approval is the exact same thing that any underwriter would have.
Awesome. I don't think there's any other questions, are there?
Yeah, just more statements. I think we're good.
Perfect. Okay. Well, thank you, Jose. That was awesome. Really a lot more in depth today. And it's great because this is something we use on a daily basis as loan officers, right? And we should have pre-approvals out there. We should be reaching out to our realtor partners, building those relationships in order to be able to get more people referred to you to give them pre-approvals. And if you do it correctly, like we went over today, then that will turn into more referrals for more pre-approvals. So thank you, everybody, for tuning in. Again, we do this every Tuesday and Wednesday night at 7 p.m. Eastern time. So thank you for tuning in, and we hope to see you next week at 7 p.m. Eastern time on Tuesday. And then we do our daily mortgage rates live every weekday at 11 a.m. Eastern time, too. So hopefully we'll see you all tomorrow for that as well. Take care, everyone. Thank you.
Thanks, everybody.